Jono Barrat from Commodity Broking Services in Sydney. Jono, morning to you. There was, of course, hope springs eternal built into that price action, but what about fundamental factors as well? That surprise renewed drawdown in inventories. How much of that was behind the rise?
Yeah, Carsten, it's actually quite interesting because obviously there's a little bit of euphoria surrounding what's happened in Greece. But when you look at the move last night in crude, you know, we did get a draw in stocks, which is pretty common for this time, but it was a lot larger than expected. Obviously, summer drive time really supporting the prices there. But not only that, you know, we've seen a little bit of dollar influence. You know, the euro's firm dollar is weak, that's helping it. And because we're now entering into the hurricane period, Hurricane Arlene is about to hit the Gulf, so that all of a sudden conjures up concerns that flow will be affected by hurricanes. So there's a few finding factors, I think, which are going to support the price for crude. And I think it looks quite strong. In fact, I think it might even get up to that to US 100 again.
Intriguing as well that that's presumably going to be driven by the belief of further US dollar weakness, and that was doing the rounds overnight yet again. One strategist at RBS Securities in Stamford, Connecticut, saying, look, the third round of US economic stimulus is possible from where Europeans sit. Put it that way, it has a much more negative US outlook. People optimistic on the euro are really just more pessimistic on the dollar.
Look, you're dead right. I mean, when you look at where the US dollar is and what it's trading, you know, it had that ability by the dollar index to break through that 76.40. The fact that it did fail again suggests that we're now testing the lower end. But I think if it holds, if the dollar index holds around 74.50, I mean, our analysis points actually to the Fed using the dollar as more as a tool. But I think you're correct in saying that it's more euro talk at the moment rather than US talk that's driving some of these commodity markets. The strengthening euro, weaker dollar.
Let's talk grains. USDA report on that one turning fairly bearish on the outlook for the crop, the weather factors at play there. What are you expecting with price action in the next week or so?
Well, it has been good actually. It's been seasonally a very good trade because as we come into harvest and we're nearly completed harvest, we've got about 30 to 40%, I think about 30% to go. But it's an interesting seasonal trade because crude prices, wheat prices or grain prices generally come off during harvest because a lot of farmers are actually securing and selling their crop at good spot prices. So they're getting very good prices at the moment. But there is still this overhang in the market about the new crop. And I think that to me is the big concern because there's still weather issues which is prohibiting farmers getting in to actually plant new crop. Now I think that'll support the price, and I actually feel that grains at this period, I think if you like the long grain story, then this is a good opportunity to get in.
All right, are you long gold? I know you're kind of more towards bias in favour of silver than gold, but overnight you got another bounce in the gold price despite a resolution for part one of that austerity vote in Greece. Surprised at that rise?
Look, I think it's, if anything, no, I think it was a more dollar trade again, very supportive. But I tell you what, when you look at what's happening in silver and gold, you know, gold is trading about 5% off its record highs. Silver obviously hasn't reached that, or close to that record high at $50, is trading over 30% off it. So when you look at where the markets, if you've got that nice precious metal story, silver is the one to go for, and technically it looks like it's due for a very good bounce. So we're weighted quite heavily in silver at the moment because we feel that's the best cheap alternative to gold, and we think it's got a lot more legs on it.
Okay, the Australian dollar pushing towards 107 US there against the greenback now. Interest rate expectations, if we swivel into next week, Jono, are kind of a no change, although money markets and economists split on this one. Where are you seeing, given the latest round of information?
Carsten, I reckon there's a no change. I actually think it's going to be a tough call, but no change. And I think the Aussie will be supported on the back of that. The Aussie, I think, will get a new story or a new lift in its price just due to a relatively good commodity story. RBA, no change there. And obviously the interest differential making it well supported. So I think the Aussie still remains good for a move higher, but I think it's only temporary.
All right, so still eyeing that CPI print coming into the end of July, that perhaps a catalyst for some more tightening into August, if not a little later down the line.
Absolutely.
All right. Have a great day. Thanks for your insights.
Thanks, Carsten.
Jono Barrat there from Commodity Broking Services right there in Sydney for you.